Apple has quietly announced a round of job cuts, and that's unusual. The iPhone maker almost never reduces its workforce, especially not when business is booming. But this time, dozens of roles inside Apple's global sales teams have been eliminated. The big question is why? What triggered this rare move? Is Apple tightening costs or preparing for a deeper strategic shift? Once we break down the details, this decision becomes far more interesting than the number of jobs affected. The layoffs are targeted at Apple's sales organization, particularly teams that work with large companies, educational institutions, and government agencies. These are not beginner roles. Many of those affected are experienced account managers and staff who handle major enterprise relationships. Even employees at Apple's high-profile briefing centers, where major clients are shown new technologies, have been impacted. Apple has confirmed a reorganization and insists that only a small number of roles are affected. But given Apple's reputation for stability, even a small shakeup makes headlines. What makes this move stand out is Apple's history. Among big tech companies, Apple has been the most resistant to layoffs. While other firms went through multiple waves of job cuts in recent years, Apple avoided large-scale changes because it never aggressively overhired during the pandemic. Tim Cook has repeatedly said layoffs should be a last resort. The timing adds another layer of surprise. Apple is heading into what analysts expect to be a record-breaking December quarter with projected revenue close to $140 billion. Most companies cut jobs when revenue is falling. Apple is doing it while revenue is rising, which signals that this decision is not about financial stress but about something deeper. Officially, Apple says the restructuring is meant to streamline operations, remove overlapping responsibilities, and improve efficiency in its sales division. But internally, many believe the real reason is a fundamental shift in strategy. Over the years, Apple has increasingly relied on third-party enterprise partners and resellers to manage large institutional sales, onboarding, and training. These partners are now stronger and more capable, making some in-house roles less essential. This suggests Apple is repositioning its sales structure, leaning more on external networks while reducing certain internal functions. It's not a downsizing of the company, but a reshaping of how Apple sells its products. Employees whose roles are being cut have been given time until January 20th of next year to find a new role within Apple. The company says it is still hiring in several divisions including software, services, and operations. Those who are unable to secure a new position by the deadline will receive a severance package. For many longtime employees, this is still a major shift. Apple has always been seen as one of the most stable workplaces in the tech sector, and losing a role here feels unexpected, especially for those who have spent a decade or more with the company. This move signals one of Apple's rare internal shakeups, particularly in a customer-facing department. It points to the company moving toward a leaner, more partner-driven sales model. For the tech industry, it shows that even companies posting strong revenue are reevaluating operations and tightening organizational structures. And for workers, especially those in enterprise or institutional sales roles, it serves as a reminder that even the most stable tech companies can shift direction suddenly. Apple cutting dozens of sales jobs may seem modest compared to the massive layoffs happening across the tech world, but its rarity and its timing make it significant. The move comes just as Apple is preparing for a record sales quarter, which suggests a strategic recalibration rather than a financial issue. Do you think Apple is making a smart, forward-looking decision, or is this a warning sign about the future of tech jobs? Share your perspective in the comment box and let us know what you think.